This conference will now be recorded.
Okay, just want to make sure everyone could hear me. We're about to start. If you guys can hear me, throw some Y's in there in the chat box, just to make sure. Perfect. Okay. Okay, let's get started. Um, Today, again, we're going to cover the basics of the four moves when the market goes up on an up cycle and when the market goes down on a down cycle. So you guys already know, most of you guys have been with me already. You guys already know on a down cycle, we're only looking for four moves, four patterns we're looking for when the market's going down, period. We're looking for an M, A1, A2, and the reversal, the market corrects with the W. These are the four moves we're looking for on a down cycle when the market's going down. If they don't give you that, if they don't give you that move or the setup, you don't take that trade. Simple as that. Never force the trade. They have to give you an entry. There's going to be times where you're going to have your analysis correct, but you didn't get no entry because the entry might have happened mid Asia. I mean, the entry, it might have stopped dropping, at 2 or 3 o'clock in the afternoon. Okay. So for the one that just joined us, just repeat myself. These are the four patterns you need to master on the way down. When it's a down cycle, when it's a down cycle, these are the four patterns we're looking for. M, A1, A2, it reverses with the W. On the way up, it's the same patterns, but reversed. W, V1, V2, and the market corrects with the M. These four patterns, you're looking for these four patterns when the market is going up. This is when you're buying. This is when the market is going up. This is when the market is going down. Again, most of you guys have been with me for a while, so these are the four patterns just to give you a refresher. Okay, in order to beat the market, we're not going to beat the market. I'm we're not going to beat the market. We need to align ourselves with the market. So to fully understand the market's objectives, you have to understand what they do all the time with these patterns. They induce traders to take positions. They're going to induce you to take a position. If you've been for me with a while, you understand what I'm saying. If you're brand new, maybe a month into this type of training, understand that the market, every time the market is going to induce you to take a position because your account is of no use to the market until you trade it, until you click that mouse. So what are they going to do? They're going to create panic. They're going to create fear. They're going to move the market quick and fast because they want you to start thinking irrational and they want you to chase that trade. They're going to hit the stops, the stop hunts. They're going to clear the board and they're going to force you into margin trouble. Margin trouble, that means you're over leveraging your account. All that means is that, you might know how to trade, but if you can still find yourself in margin trouble because you're over trading. Basically, if you have a $500 account, you're trading, you took two standards. Well, if that trade goes against you for 20 points, 15 points, you're going to blow half of the account. The bottom of the screen down here is going to be flashing red or pink because you're in margin trouble. Okay. Just going to give you a little brief, just a brief background of what the markets are capable of doing. The market, these guys that move the market, they can toy with the spread. You'll notice sometimes. Let me move this to the side here. If you look at this indicator, the spread to get into this pair, the pound yen, is 1.5. Start watching it when they're doing their stop plan around 10:30, 11 o'clock, even 12 midnight my time here in California. Start seeing this spread. If whoever doesn't have this indicator, you're gonna have to. I'll have to send it to you. You're gonna have to download it and upload it to the chart. You'll start seeing the spread go up. Why? Because they're gonna make the weaker traders pay a big spread. Okay, so just understand the market can toy with the spread. Okay, you'll start seeing the spread go up, especially on on pound New Zealand and any pair that has the New Zealand pair in it, the currency in it. You'll start seeing this thing go up 3-4 points, and if you see it throughout the day, like around 2-3 o'clock in the afternoon when the market resets, that spread is going to be up there in the 10 points. That's why scalping is no good, because think about it. You're going to pay 10 points to get into a trade to make what? 5 points? That's not the business. So you'll start seeing the spread. I mean, if you want to pay attention to it, pay attention to when the market opens around 2-3 o'clock in the afternoon, Pacific Standard Time. You'll see that spread go up. Okay. So before we get into these charts and show you these moves, I just want you to understand what the markets are capable against you. They know who's in margin trouble. They know where your stop loss are at. That's when we take trades, we're going to enter after the market hits the stops. They hit the stop on high, stop on low. That's their job, to take that. So we need to understand that, you know, we got to take this serious. This is not a game or a hobby. The markets they're lying away for us to make an uneducated decision, and they're going to get you. That's why, the game is not to be traded every day, only when they give you the setup. Okay? So understand that the trap moves, the false moves, most of the time, like 80 to 90% of the time, they're going to happen at the beginning of the week, Sunday, Monday. That's the reason I don't trade Sunday, Monday. And I'm going to explain to you why on the chart right now. Okay. At the beginning of the week, Sunday, Monday, they will trap you. At the beginning of the day, which is 2 p.m., 2 p.m. to the next day at 2 p.m. That's when the day starts. That's when the market resets and starts a fresh new day. They're going to trap you. That's the reason we don't trade the Asian session. The Asian session is considered more like accumulation. That's it. They're going to trap you at the beginning of the session. They're going to trap you at the end of the session and towards the end of the day here and at the end of the week. Okay, so I mean, so back to the pattern. Whoever got in late, remember, we're only focusing on if it's a down cycle, M, A1, A2, the market corrects with the W. That's on a down cycle. The market's going down. On an up cycle, it's this upside down. W, V1, V2. The reason we're going to name them this way, excuse me, they're reversed with the M. The reason we're going to name them this way, because during the week, I might just not send a signal out, but I might just I might shoot out a setup. I might say, hey, keep your eye on the pound yen. We're looking for an A1 setup. That means we're looking to sell. Or possible M forming, looking to sell, pound yen, M pattern forming. Wait for the setup to develop so we can take position. Or it might be an A2 setup. And remember this, the market is based on a 3-day, 3-level cycle. Is based on the weekly cycle. I'm going to show you a weekly structure, and the market is based on a 3-day with 3-level cycle. The market goes up for 3 days, it's going to correct after 3 days. It goes down for 3 days, it's going to correct. Okay, so with that being said, I'm looking now I'm just going to point out a couple of things for the ones that are new and the ones that already have it. I already have my ADR here, the average daily range. You need to know how many points that pair moves per day. Okay. Because don't expect to get 200-300 points if the pair only moves 80 to 90 points per day. So this right now, I'm looking at, this is the pound yen. Currently is moved from when the market opened to where it's at right now. It's moved 61 points. Basically, it opened here, is only moved 61 points. This is how many points it moves in three levels or 3 days. 491. So when this market, let's just and to give you an example, if this market drops 490, 480 points, what do you think is going to happen if it drops already? If you see this market drops in about 2 to 3 days and you measure from here to here, and you know, and the 3 times ADR is 491, what do you think, what do you see happening if it's 490 down here? Any idea? There's no wrong answer, but some of you guys, more than half of you guys been with me already. If it reversal, correct. If it's been dropping, there's your M, A, A2. I just told you it reverses with the W. 3 levels. You're going to be able to see this level 1, level 2, level 3. The 3 levels could happen over the week, over 3 days, and you can also see them. You can also see 3 levels of rise or drop intraday, meaning within that day. With London, instead of the whole week, you could see the market drop 3 levels in London. So let me explain to you what we're looking at here. This is a weekly structure. This move happened last week. You see these gray lines right here? That's where Sunday opens. That's where Sunday starts. You see this right here? This is today, Sunday, where the market opens. So everything in between here, it's every day. 1 day, 2 days, 3 days, 4 days. Is missing 1 day because there was a holiday. Okay, so these are my weekly lines. They paint on Sunday to Sunday. That way you can distinguish the week. These vertical lines separate each day. Okay. These vertical lines separate each day, and the market resets every day at 2 p.m. And all you guys were right. Reversal time when you see 3 levels of drop or close enough to the 3 times ADR. 2 p.m., 2 p.m. Pacific Standard Time. Every day the market resets at 2 p.m. You're going to get a fresh new high and a fresh new low every day at 2 p.m. So let's you guys been with me for a while. So you already know you have your weekly indicator that separates each week. You have your period separators that separate each day every 24 hours. This dotted line right here is where price opens. It's just telling you that price opened here on Sunday. The green dotted line up there is the previous week's high of the week. Okay. And this little red indicator right here, that's the previous week's low. Remember, every week is going to have a low for the week and a high for the week. If you look at this, if you look at the weekly structure here, Sunday, Monday, Tuesday, Wednesday. Actually, they closed, so skipping is missing a day. So this will be Thursday here because they were closed for New Year's Day. It'll be Thursday here and it'll be Friday here. By looking at the weekly structure, where's the high? Where's the HOW, the high of the week? What day is the HOW located at? What day? Monday, correct. Where's the LOW, the low of the week, the low? This will be Monday, Tuesday, sometime between Tuesday and because it's missing a day. Correct. It'll be Thursday. That's your low. Okay. With that being said, overall, the market went down, correct? If they, you see why we don't trade Monday, excuse me, we don't trade Sunday, Monday. You want Sunday, Monday, let it open, let them establish the anchor point, let them establish the anchor, which will be the M, and you trade away from here. You trade away from here for the next 2 to 3 days. I just finished telling you that we're looking for M, A, the next day, A2 the next day, and the reverse is the W. If I show up to the chart here on Monday night going into Tuesday, right here, Monday night going into Tuesday, the market set the M here, they dropped. How I read the market is that how I read the market, they dropped again. I'm looking at it this way. The M is up here. That's my peak formation high. Okay. Peak formation high. You need to trade away from that peak for the next 2 days. The pattern, remember the pattern, the pattern, the pattern, the pattern, the pattern. If my M is up here, which is the anchor point, and they traded away from it, what's my next move here? What's my setup here? A1 setup. They can also give you another M. Here's your A1 setup. And it was a big drop. Now that you see this, I mean, if you look at this chart from the week, keep in mind it's missing a day. When was the best day to trade? There was only one good trade here. What day was that? What day was that one good trade? There was only one good trade here, and it was this right here. That's it. This, I didn't get into that because I didn't know if they could, I was expecting another A2 pattern here. So Sunday, Monday, Monday, Tuesday. Actually, you see how it skips right here? It skips a day. So Monday, Tuesday, it'll be Wednesday when finally the market open here back again on Wednesday. So technically speaking, by seeing this, Monday night was the better day to trade. There's your pattern right there. And that was a huge move. If you had just been patient enough to wait for that setup and you got in, I'll show you when you need to get in. Right now, I just want to go over. I mean, that good drop was good for 100, almost 200 points. If you're patient, you're going to trade less, and this would have bagged you 200 pips. If this is the only trade you took all week, you're going to be sitting pretty good. Okay. I want to go over levels before I break down more patterns. Let's look at the levels because I want you guys to understand the levels. Take notes if you haven't seen this already, or you forgot to take notes before. Take notes. I'm going to show you the levels because the levels are going to help you project and anticipate the next possible move. Okay. I just finished telling you that the market is based on a 2.5 to 5 day cycle. So, I mean, technically it's 3, but sometimes you'll see an extra day or two of the market moving in the same direction. So the levels are drawn out over 2.5 to 5 days of movement in one particular direction. This, by identifying the levels, is going to help you is going to give us some kind of structure of what are we looking for? What's the next possible move? Okay. So in the perfect world, it'll be like this. Period separators. In the perfect world, it'll be like this. The W sets the low of the day. the V1 sets the low of the day. I mean, not here, but I would want it to set the low of the day. You have another V, which will be my V2, and then you have the reversal with the M. So in the perfect trading world, it'll be like this. Asian sessions here. They set the high, they trade in between the high and low, the initial high, initial low. When the market opens, initially this will be your high, initially this will be your low. That's why the low or the high is going to come around London between 12 midnight California time and about, I'll say about 3 in the morning California time is when the low or high is going to be set. So if I'm telling you those times, you need to show up to your chart between 12 midnight and about 2, 3 in the morning. That's when the high or low is going to be set. I normally show up to the chart around 11 o'clock at my time, um, just to see where we at, what kind of setup is developing. But again, in the perfect world, in the perfect dating trade, it'll be like this. W, day one rise, level one rise. Day two, level two rise. And then day three, you get your third level rise. And what happens? It reverses when you can confirm 3 levels. Okay? Understand that at level one, when here it is, I think I did it wrong right here. It should be like this. W, V1, V2, and reverses with the M. That's the pattern. That's what you're looking for in an upcycle. W, V, V, M. Period. That's it. That's what you're looking for. The better setup would be that the V1 sets the low. The better and clean setup, V2 sets the low for the day. Remember, there's a high price and low price. I just gave you these period separators, and they gave you taking it off the low. That's the better setup. If there's no M pattern that forms on day 3, the M should come at day 3. You simply don't take the trade. We're not going to force the trade. With this strategy, you're going to be highly selective, cherry pick, take what's crystal clear. They only can do 2 things. They only have 2 moves here. What they could do here, they can give you W. If the next day we're expecting V1 rise, they can either do this. They can give you the V, sets the low, or if they're going to rise, it could be this way. It could be if the V does not set the low, that's not a clean setup. The more advanced move would be what? Remember, this is my moving average. This will be my 50 EMA. You guys been with me for a while. Well, what kind of move, what kind of setup would that be? That'll be a 50 bounce. That's what you should be expecting, a 50 bounce. Or the clean setup would be the V1 that sets the low for the day. That's it. Those are the 2 moves you're waiting for on the way up. And now if the market decides to give you something else and drop back down, well, you never got into the trade. So there's no, well, I got in and no. They don't give you what you want, you don't take that trade. Now, at this level, remember at level 1 right here, I'm just going to show you sometimes they'll do this. You see how you got the W here? This is your peak formation low. Peak formation low. The next day, obviously they retest, they should retest. If they retest, that's fine. But then sometimes you guys will be confused. The market will be a straightaway rise. It could straightaway rise. You might be thinking this. For the ones that most of you guys have the indicators, you have the stop hunt high, stop hunt low boxes. Let me show you to you. Most of the time you'll see this. Pretend this is my stop hunt high, stop hunt low. Let me break it down again. Don't fall for this. At this level 1 rise away from the peak, do not fall for, I put it, do not fall for this. The market go in here. You thinking this, M, you're thinking stop hunt high drop. And I'll show you on the chart. If they don't give you the clean, V1 setup, that's the better trade. Or they can do the 50 bounce. Let me change the color on this pin. They can do the 50 bounce, boom, and bounce off the 50. But sometimes these guys will fool you, and I fell for it. They'll do stop hunt high, give you a nice M pattern. It'll drop, probably bounce off the 50 and back up. That's why don't just be like, oh, stop hunt high drop. Like, no, you have to understand the cycle, because they'll fool you with the M. They'll fool you with the nice M pattern up here, thinking they're going to drop. And sometimes that's why I want you to set your, if you happen to do that, because it's happened to me, I'm telling you, don't do it. Just wait for the actual setup. But if you find yourself trading the wrong way, you need to set your take profit at exactly 50 or even 49 points. Because what happens is you'll think this is in the M pattern, stop on high drop. It'll drop for about 50 points, depending on the pair. And then they'll give you the W and rise. Okay, this happened to me sometimes. That's why you have to set a fixed take profit. Now, sometimes you might not get the V1. Then you might get another W, and then another W. That could happen as well. Okay, let's continue with the levels. Just want you to understand that. And that's why, you have to understand how the levels work. How to identify the levels. If you just want to count days, again, 2.5 to 5 days in one direction, either drop or rise. You can count the levels. Hey, it's been 3 days of drop. It's probably going to reverse. Each level will be approximately 1 ADR. That's why you need to know how many points does this pair move per day. And it's right here. This pair currently is moving how many points? You either can do 164, that one clearly tells you there, or all you got to do is take this number and divide it by 3. Are we clear on that? So that pair moves 164 right now. Okay, keep that in mind. 164, you have to write that magic number. That's your magic number, 164. This pair moves 164 per day. Okay, why is that important? It's important because based on the levels, I just finished telling you that it moves 491 every 3 levels. That's when you should expect a reversal, a correction. Each level would be, so it'll be like this. It'll drop 164 points. The next day, pull back, drops another 164 points. The next day consolidates, pulls back up, drops another 164 points. If you add this and you add this and you add that over 3 days, that's your 3 times ADR. You got 3 levels: level 1, level 2, level 3, reverse time. Start looking for reversals. Start looking for clues to go the other way. That's why each level will be approximately 1 times ADR. Okay. You can use the Asian session boxes, the indicators that separates each session. You can use the Asian session boxes, how they're stacked up on each other. I'll show you examples of it. Or the other one that I like to use too is the moving averages. Level 1, the 13, the catch up will cross over the 50, the water. They'll cross each other like that. You're probably at level 1. Level 1 rise or level 1 drop, depending on which way it's going. Level 2, the water, the 50, will be crossing the Mayo, the 200. They'll cross each other. And level 3, the 50, the water crosses the Blueberry, the 800. Or the 200, the Mayo crosses over the 800. They'll cross each other. Or the moving average will be fanned out. They'll be just spread apart. And I'll show you right now. Okay. If you want to count the levels using days, here you go. What kind of structure do I have here? There's an M structure up there. Obviously, if I have an M structure up there, it's probably rising off a W. W, consolidation, V1, consolidation, V2, the reversal. There's your W, excuse me, there's your M correction. It's going to correct with the M. W, V, V, M. Okay, that's the pattern. So it was on our way up. Now you got three levels of rise have been confirmed. You get the structure up here. Now start counting days. Day 1 drop, level 1. Day 2 drop, level 2. And day 3 drop, level 3. So remember my period separators? You can use the period separators. You can go right here, period separator, day 1, day 2, and then day 3 begins. You got 1, you got 2, and you got 3 days. 3 days of drop. You can count the levels that way. When the 3 levels are seen over 5 days. Okay, remember now right here. Remember the M has been dropping, M structure, consolidation the next day. What setup am I looking for here on the next day after the M, after the peak formation high is set there? What setup am I looking for here? A1, it drops. What setup am I looking here the next day? A2, drops. What setup am I looking over here down here now? The W, reverses. And this is your peak formation low. Peak formation low, or possibly the low of the week. Over here, HOW, high of the week, or peak formation high, however you want to describe it. Once it anchors, you trade away from this thing for 2 days, at least 2 to 3 days. Once the peak formation the peak formation low is anchored, you trade away from this bad boy for at least 2 days, 2 to 3 days, as long as they give you a nice setup to enter. So there's your setup here. You got your W. It's rising. Peak formation low. It's rising. Level 1. Day 1. Look at day 2. This is how the days get extended. Look at level 2. It took 2 days. It went sideways. Remember, each level is like a stair. It has to take out the other level. They're like stairs. Okay? So you got your peak formation high, excuse me, peak formation low with the W pattern there. Level 1, day 1. Level 2, day 2. But it failed to rise at day 3. That finally at day 4, you got your rise. And day 4, it took almost another 2 days. So you got 3 levels over 5 days. And what happens at what pattern are you looking for at level 3? There's the M. What do I expect the next day? If you don't take this trade going down after everything's been confirmed, what setup am I looking for the next day? A1. So I'm looking for stop on high, drop. What setup am I looking for the next day? Stop on high, drop, and it should be W, reversal. Remember, the A1 and the A2, the better setups will be when they hit the stop hunt hit the stop hunt the next day, the W. Where do you think the bottom peaks of the W? That's the better setup when they hit the stop hunt boxes on the bottom. Simple. So here we have the levels over 5 days. Okay, remember ADR? How many points that pound yen is currently moving right now? 164. So if you want to count from here to here over three times ADR, it's not particular days. You know, there's sometimes where the market will move 200 points for whatever reason, news release, it moved in that direction, and you got maybe 200-point move, 250 points. Okay, I just finished telling you ADR, ADR, 3 times ADR, you start looking for a reversal. So check this out. 164 from here to here. 164 from the low of the day, from here to here is 164. And from the low of the next day to here, 164. If you can count 3 levels, 164, 164, 164 gives you your 492. What did my indicator say? 3 times ADR. You start looking for a reversal. So check this out. This could be W. It could be another W or a V, another W or a V. What do I expect up here? What pattern do I want up here for me to get into this move? Otherwise, I'm not getting in. M pattern. For the M to be valid, I'm looking for that M pattern. The high has to, anytime you sell off the high, off a pattern that's valid there, the high or low has to hold 30 to 90 minutes. If it's an M structure, it could hold for 45 minutes. In the perfect world, the M goes like this. Check this out. I'm gonna show you what I mean. You see this right here? Where's the high? This little candle right there. Okay, that's the high. Think about it. Look how long is this going to take to develop. This could go like this: 1 candle, 2 candles, 3 candles, 4, 5, 6, 7. There's over an hour and 45 minutes there. There's your pattern. And you get in. I'll give you the rules for the entry. The high or the low has to hold 30 to 90 minutes. If it's railroad tracks, 30 minutes. If it's anything else, MWs, sometimes you'll find yourself holding for about an hour by the time you get in. But what I'm trying to tell you here is that the levels will help you predict and anticipate the next move. Level 1, level 2, level 3, and back down. Level 1, level 2, level 3, and back up. Level 1, level 2, level 3. Simplicity. Keep it kindergarten. You guys follow me? You see this? Level 1, level 2, level 3. The M pattern, level 1, level 2, level 3, reversal. You're going to be able to cherry pick the days that we trade. Or at least you have you'll be able to project and anticipate of the next possible move. And if they don't give you the setup, you simply on that particular trade is a pass. Okay, so you have your ADR. Now, if you want to count the levels using the agent session boxes, okay, look at the agent session boxes. On the way down, I'm counting the bottom part of the agent session boxes on the way down. So obviously, if it's coming down on this in this example, it's probably rising from a W, V, V. What do I have here? There's my M structure, level 3, M structure. Okay, but I want you to count the levels. Look at my agent session boxes. It drops, level 1. Look at the bottom of the Asian session boxes like stairs. Drops, level 2. Drops, level 3. Look at level 3, multi-session W or intraday little W there, and the cycle repeats it's all over again. The Asian session box is going to help you. Drop, drop, drop. And the same thing goes rise, rise, rise. If you just go off the Asian session boxes. Okay, can you guys clearly see that? How they're like stairs, the Asian session boxes, correct? There it is right there. Look at the arrows, Asian session boxes. Now, look, this is when the market consolidates. Look at the top of the Asian session boxes, how they're parallel, they're going sideways. Look at that. Finally, you got the rise there. You got the rise here. That's consolidation. You see that? Look how many days level 1 took. You got it's probably drop off the M, A, and you have the W, reverses. But look at the Asian session boxes. You got your rise, but then it went sideways, sideways. Then finally, you got the level 1 rise. And then you got your level 3 rise. What do I expect up here at level 3? What project and anticipate? What am I projecting or anticipating? In pattern. That high has to hold. If you see 3 hits to the high, 3 hits to the high here, another hit to the high in London, there's your setup. You're looking to sell that, the M pattern. Okay, I will never stop repeating this. This is what you on the way down, M, A1, A2, correction with the W. On the way up, you're looking for trades from the low of the day with the W, V1, V2, and it corrects at level 3 with the M. Those are the 4 patterns you need to master, and that's it. Okay, and the last to identify the levels are your moving averages crosses. On this particular, look at the setup. Level 1, look how the moving averages cross over. Level 1, the 13 catch-up crosses over the 50, the watermark. Level 1. Look how level 2, they start working at level 2. Look at the cross. The 50 crosses over the 200. Look at level 3. They're fanned out. The moving averages are split apart. That'll give you some idea of what you should be projecting. Crosses, okay? They have to cross each other, and then they fan out. Extended level 3. If you get an extension of level 3, you're going to have that 200 cross over the 800. That's the only difference. This is on the way up. The 13, level 1, crosses over the 50. The 13's the catch-up. The 50's the water. So I might, sure. I'm going to name them for you. Write these down, because when I shoot you a setup, I could say, hey, possible level 1 rise, 13, the catch-up crosses over the water, confirmed. We're looking for a V1 setup. So I could just blab out the setup like that. So remember this. The 13 EMA is the catch-up. Let me put it right here. The 13 EMA is the catch-up. The 50 is the watermark. That little aqua, I call it the water. The 200 is the white one, is the Mayo. The 800, which is this navy blue, dark purple We'll just name that the blueberry. That's it. Very seldom, I seldom use that blueberry. I just probably use it for take profit, but that'll be your blueberry. Okay. 13 is the ketchup, the 50 is the water, the 200 is the mayo, the 800 is the blueberry. Okay. On a side note, just keep in mind, I trade the pattern, the pattern, the pattern. If you're freshly new, you need to wait for, I'm gonna show you when you need to enter when the market closes or above or below the 13, which is the catch up. But once you get once you trust your analysis, the pattern dominates any indicator, especially after you confirm the levels of drop. Because sometimes what will happen is you might have a nice W and you're like, I'm gonna get in on the next candle. You need to get in like close to the low of the day when you buy, but this candle might shift on you. This candle might just go boom, 30 points. And if you trade up here, well, from here to here, you're 30 points away. That candle shifted on you. That's why I trade the pattern, especially after you confirm the levels of drop. Because sometimes the 13 might be up here, the catch up for you to enter, and it's far. I mean, it's sometimes you'll see that. Okay, so a quick recap so we can hit the charts. The levels will be seen by counting days of rises or drop, 2.5 to 5 days of rise or drop. The ADR, the average daily range. You need to know how many points that pair moves per day, and that indicator will point it out for you. The agent session boxes, the moving averages. Okay, so let's hit the charts. I just told you that the market is based on a 3-day, 3-level cycle. So what's the reason we don't trade Sunday, Monday? Keep this in mind. Every week has a high of the week and of the low of the week. The reason you don't trade Sunday, Monday is because it's a fresh new week. You need to either they're going to finish off the cycle from the previous week. It could be 3 levels of drop from the previous week or rise. Let that finish off, and then you can have a more clear setup because you're going to be able to cherry pick your trades now. This trade is this past week. Sunday, market opens. They consolidate Asia. London opens. They faked everybody to the upside. I just finished telling you at the beginning of the class that they trap you at the beginning of the week. And in this case, they trap long holders the beginning of the week. What did the market do? The market opened long. What did the market do? Overall, dropped. So when the market drop, I want you to start reading the market this way. Okay, there's your fake out. Trap long holders going long. They gave you the M pattern drops. The way when I show up to my chart here on Monday night, I see that it started to drop. All I'm looking for is AM or the A1. I'm looking for clues to take this short. That's all I'm looking for. You shouldn't be looking for longs. Why would you be looking for longs? Okay. So, with that being said, the better setup would be stop on high, drop. But guess what happened here? I already know. Guess what? I guarantee you. What do you guys think is happening here? Or here, probably. But most likely here at London Open. Let me zoom in so you can see that, because when you analyze, I want you to zoom out just like this. But when you zoom in, I'm gonna put this right there. I zoomed in just one level. There's the M structure up there. Consolidation. We don't take trades in Asia because you're going to be stuck in that trade for over 6 to 8 hours. You got your pattern. There's the M drops the next day. consolidation, started to drop. I'm reading this as it's coming away from the peak formation high. So what's my move here? You see the little M right there. It's a nice little M right there. I was expecting A1, but there's two moves here. I just told you, stop on high. See, most of you guys will probably wait for this. Okay, they went stop hunt low. You're thinking rise. But remember, I told you at this level, you're not going to trade back towards that peak. This is your peak. Identify the peak. Do not counter. Do not counter back towards the peak at this level. The next day after the peak is set, do not counter back towards it. Meaning, do not counter, don't trade longs because you're going back up towards the peak. And it did the opposite. They'll fool you with this move, thinking rise because you're thinking stop hunt low, rise, and it just drops on you, and it just drops on you. I want you to start seeing this market again. They only got two moves here. Stop the best setup will be stop hunt high drop, or I guarantee you almost that they're bouncing off the 50 EMA there, that they're working it. Let's put it to the test. Guarantee you either here or here they're bouncing. The price is being rejected off the 50 and drop. Let's put it to the test. If I bring in my sessions, this will give me the stop hunts. Who would most of you guys would have felt for this, thinking this, right? What did I tell you here? At this level, do not counter back towards this peak. The market is coming down away from that peak. You need to be looking for moves away from that peak. So in this example, they'd hit the stop slow, but what kind of pattern they gave you here? Look at the pattern. Can you guys see the M pattern here? Okay. Remember, just to give you guys a refresher, there's three variations to the M. The M sets the high. That's variation one. That could be, that could be a M1. That's M1. Exactly, Clarence. There's three types. So if you guys could understand me, there's three types of M's. M1 sets the high. M2 is trades right even where the high is at, the original high of the day. It won't break it. That's type 2. Type 3 is right here. It's like a level. It's like one step below the high of the day. So you got, again, there's three types of M's. Type 1, that sets the high of the day. Type 2, that sets the high. It stays right there. Like where the Asian session box, the top of the Asian session box, that's type 2. And then type 3 is where it's like a step, it's like a level, a little drop below the Asian session box. That's your type 3. Okay, that's it. But this is an advanced move. If I want this in here, obviously is the better setup, but sometimes they're not. They gave you the type 3M, but do you guys think that type M is being rejected at the 50? Let's put it to the test. That's all they got here at that level. I mean, that's the only move those are the only two moves they got. So if I bring in my moving averages, plug them in. What did he do at the 50? Yeah, it's a bounce, depending on how you look at it. I call it a rejection of the 50 because a bounce to me is like when you bounce a basketball that it bounces, comes back up, bounces, comes back up. So I mean, but yeah, you can look at it that way, but I look at it as it rejects and drops, rejects and drops. So you got a rejection of the 50, but you have the same you have the same thought process. You see that? Let me zoom in a little bit more. You want to know where's your entry at? You guys been with me for a while. Where will you enter on that trade? Obviously, you wait for London to open. Your entry would be once it crosses, right here, your entry would be this. You see this body of you see the red body of the candle closing below the ketchup? In this case, it's closing below the ketchup and the mustard. See how it closes below it? Your entry's on this next candle right there when it paints red, and you need to be ready to take it. Correct. Closes below the ketchup. The body of the candle closes below the ketchup. You don't enter on this candle. That's your confirmation. You wait for the next candle to paint red, because the next candle could have been a pullback. The next candle could have gone green and then started to drop. You wait for the pullback, and there's your entry right there. The goal is 50 pips. If you wait for this, you go right into profit. 30 minutes into this trade, look how many points you're up 30 minutes into this trade. How many points is that? That's 78 points. Everybody, disregard the last digit. 783. It reads at 783, but technically it's 78 points. Did you meet your goal of 50 points? Yes, you did. If you stayed in this trade, when do you need to get out of this trade? If you stayed in this trade, you were stuck in profit over 100 points when it consolidated on you right here. That's why about 2 to 3 hours after this trade, you need to get out. But technically, when do you get out of this trade? Because if I stay in this trade based on the rules, I would have taken this trade all the way through New York and would have been up 171 points. You can you can technically get out before the new session starts, but if you don't, you get out when a green candle closes above the 13 EMA, which is going back up. You should have got it. If you stick to those rules, you should have gotten out right here. Look at the green candle. The green candle closes above, even though it kept going down some more. We didn't know that. At this time, we did not know it was going to do this big drop. So at all we know, it could have gone this way, up, back on you, reversed. So this would have been technically your exit right there. And if you had waited to get out right here, you would have, instead of making the 78 points, instead of making your 50 points, you had to enter right here. You still would have made 107 points. Let's just keep it an even 100. If that's the only trade you took all week on this pair, because that was the only setup, you're going to be highly profitable every week, week in, week out. Okay. And as you can see, look what happened. It dropped. Drop some more. Well, we didn't know it was going to drop. We expected another drop, but the next, until the rules were met in London, we were expecting another A2. They didn't give it to you. No big deal. If this is the only trade you took because you put a standard or even $5, you either made 500 or you made 1K. But you see what I'm trying to tell you. You only missed out on 20 points because if you waited for this to come back up on you from here to here, if you took the trade here and in 30 minutes you were up almost 80 points. Why would you want to be stuck in this trade for like another 4 hours and then it came back up on you? Like, you got to be smart. Like, we didn't know it was going to drop. As far as we know, right here, it could have gone back up if you didn't get out. But you met your goal. That was the best trade right there. And if I were to be reading this market, look what happens when they drop big time, right? Look at the pattern. Look at the pattern. What did I say that when what happens when the 13 ketchup crosses over the 50? What level are you in? See right here, it's kind of tricky right here because you got the crossover here and then you got the crossover here. Level one. So I need to analyze the previous week or 2 weeks because it's been consolidating for a minute. And then look how they fanned out here. So this is probably level 3 behavior overall, and it dropped big time. Because look how the 50 didn't cross over the 200 here. The crossover was right here. So see, that's why the levels are a little tricky. Sometimes they're going to be very clear and sometimes they're not. Okay. So anyhow, let me go back to the weekly structure. You guys need to put this indicator just like this, a plain indicator to form your bias, and then you can switch over to another template that has the indicators just to give you some guidance. Okay, so let's continue with this pair. Let's look at the previous week. What happened the previous week? What day was a good day to trade the previous week? The week of December 21st to December 30th. What was the best day to trade? Exactly, none. Where's the peak high? Where's the W? Where's the M? Where's my anchor point? Where the anchor's the M or the anchor's the W? Where's the M or W at? Exactly, none. You show up, look what happened. Sunday, market opens, goes sideways. It decides to drop. Okay. When I show up to the chart here, it came back up, but I'm too close to the high and I'm too close to the low. Like if you look at it as a channel, if I were to look at it like this, I'm here at the market, I'm close to the high and I'm close to the low. I can't distinguish where's my peak high or peak low. I'm too close to both. So it's a pass this day. Okay, it went sideways. It went sideways, dropped back down, went back up. I'm still within this channel. Okay, you need to be at least, write this down because this is not in the training. You need to be at least 50 to 75 points away from the peak, either peak high or peak low, to trade away from it, because the mentality is that they're not going to drop the market 50 points to 75 points back towards the peak and let everybody else out of those trades. That's so that's your side note. You need to be 50 to 75 points away from the peak. So when you show up to the chart, where's the peak at? Make sure you're 50 to 75 points away from it. If it's 50 points this way and 50 points this way, that's a 50-50 trade. I'm not taking that trade. Let's just say you have an M pattern here, drops, and then you have like a W pattern here, and then the market's in the middle. Well, if you measure from here to here and it's 50, and then you measure from here to here and it's 50, it's a pass on that trade. Don't take that trade. You don't know which way it's going to go. Let them pull away from there. That's what you have to wait. So technically speaking, this day was a pass this whole week on this particular pair. It went up, it came back down, back up, back down, back up, back down, back up, and then it started to drop. This was your better day to trade right there. Let's look at the previous week. Okay. Indicator here, trap move. At the beginning of the week, they're trapping long holders. What did they trap in long holders? What did the week do? Why? The reason we don't take trades Sunday, Monday is because you need them to set the peak high or peak low. Sometimes they might not sometimes they might set it on Monday, but look at the trap move. They trap long holders again. They drop. Now, when I show up to the chart here on Monday night, going into Tuesday morning, I'm looking at it this way. They're trading away from the peak. So guess what? I'm looking for moves to go. I'm looking for clues, setups to go short. So if this is my anchor point, what move am I looking for here? I'm looking for A's or M's, but most likely A1 the next day. What move am I waiting for the next day after this A1? Okay, A2. And look at what happened the next day. It kept dropped and it dropped another level. Now check this out. I'm gonna zoom in a little bit more now. Hold on, what day was this? December 17. Let's put the pieces together. December 17. Okay. Let me put my indicators. Now that you form your buys, when I show it to my chart, I'm looking for clues to go short. When I bring in my sessions, let's see if they hit the stops. Okay, you got your peak there. It traded away from it. Notice how right here it went up, it went back down, it went back up, it went back down. Now, I probably would have taken the trade here and you would have hit, it went back up and then back down. This day, you probably wouldn't have made much profit. It was not clear. So this day, I mean, you're looking for clues to go short. So obviously, it went short, it went back up. This probably would have taken you out if you took this trade and you didn't get out because you didn't meet your 50 points. It went back up and then it went back down. So this was not a good day. So I mean, there's going to be times where there's going to be times where we're going to take an L, but there's those L's, those losses need to be very few. It's part of business. You're going to take L's from time to time. So what happens? Okay. So we took an L here. If you took this trade here and you didn't get out, you got stopped out back up again. Okay. And you didn't hit your 50 because obviously you didn't get in time. So look what happened. Let's see if we got a better setup the next day. What happened the next day? We're looking for clues to only go short because I already told you. Um, we're looking to trade away from the peak for the next 2 to 3 days. Let me bring my moving averages because that'll help me out a little bit more. That way I can see the picture. I want to see the levels where I'm at. Okay. Sunday, market goes up, drops. Okay. This drop, I got my level one there. I mean, if you really look at this, the market went sideways more than anything. You don't have that nice trend. It's chopping away most of the time. Okay. The next day, you could have taken the trade here because you're looking for clues to go short. Look, there's like a M pattern there, or there's your A2 or A1, depending on how you want to look at it. So your entry would have been here, close below the catch up, stop goes above the high, and this drops, spikes, and drops. So all this choppiness it's not going to scare you anymore because you know what you're looking for. Again, the trade remains valid until the high gets taken out. I know that I told you that you would have gotten in right here. Stop loss goes above the high of the day, drops, drops. Those spikes should not scare you out because the market is trading below the catch up. You met your goal of 50 points. Can you see how the market is not is spiking the 13 like it wants to rise up on it, but it doesn't. Right here, these spikes. That's why you need to get in up here. Your stop loss goes above the high of the day because these spikes are not going to stop you out. So if you got in here when they close below the catch up, you see that little right there, it closed below the catch up. You take this trade, pulls back on you. That's not going to scare you because your stop loss is above here. And before New York open, you hit your goal of 50 points, 50, anywhere from 50 to 60 points. That's it. The market chopped around most of the time, most of this week. The guy just chops around. Obviously, George, how many points? I mean, I don't try to risk more than 20. That's why you need to get in on the pattern and not the catch up. But if you want to wait for the catch up, and let's just say you're 30 points away from the entry because you waited for the catch up to close, then all you would do is uh, lower your lot sizes to compensate for some of lower the lot sizes. So instead of you, let's just say you were going to do $5 a point, but then you look at it like, man, I'm 30. Let's just say I'm 30 points away from the freaking where I should put my stop loss up there. Then just lower your lot size. Instead of doing $5, do like $3 to compensate for that extra points that you're adding onto that trade. And then that's the only way. But that's why you always try to get better setups. Again, honestly, this is advanced moves here right here, but there's going to be days where the move is so crystal clear and you're going to get it in. You're going to get it at the high of the day, really close. But if you happen to jump in here and then you measure like, my God, it's 30 points, then lower your lot sizes. Instead of doing 0.50, lower that down to compensate it for, like, maybe 0.30, like, don't lower it down by $2 to compensate for that. That's the way I would handle that. Okay. So let's look at the next day. It kept on dropping. Again, you're looking for drops. You're looking for drops again right here. Another level drop. Look at the moving averages. They're fanned out. They're spread apart. I'm not falling for this because I'm looking for to go short. Obviously, the move happened a little late, and look what happens. The pins are working the 200 basically. That's the Mayo. Hold the Mayo. That's what they're doing right here. The pins are towards the 200, and it drops right when New York's about to open. Look at it drops right there. The pattern, the pattern, the pattern. That's advanced move right there. And if you got in right here, look at all that drop. Everything's trading below the catch up. As long as the market's trading below the red EMA, you're good. That move right there was good for another 100 points. Again, this is a little bit more advanced, but if you're going to be a trader, you got to know all this stuff. Let me look at a previous week. Hold on. Let me remove the moving averages. Okay, so out of this whole week, there was only two good trades here. Either here, remember, I want the V or the M to set the high of the day. Obviously, you got your peak formation high. You trade away from this. There was your high here. That's why I want you to zoom out so you can see the clear picture. There's your sell here. The next day, that's your high here. You could still would have traded it here. See how it drops, drops, drops. If I just go off, if I just go off like that, let me look at the sessions. Bring in the sessions. The sessions can determine your levels. It should help you out right here. Okay, look how he's dropping, right? It dropped here, drop, drop. See the levels? Level 1, level 2, level 3. Who can see that? You see how you were looking for at least 2 to 3 days of drop away from the peak, and you got it right there, right there. But look how on this drop down here, Look how look how they're working the stop hunt. If I zoom in, this is a better trade. And once you start adding more of the more confirmations, I always want to have about 3 to 4 good confirmations. Look what happened on these on that stop hunt right here, the 21st, right here. What patterns up there? There's your M. We were looking for sales. Okay. If I again, that's one confirmation. You got your stop on high, drop. We were expecting drop. This is a clean setup. You see how the M sets the high for the day? Remember, the new day started here. Where's my high? The high of the day is right here, my M pattern. You're going to be highly selective. You're not going to trade every day. They have to give you a clean setup. And honestly, by looking at this whole week, this was the best day for the setup. You got your setup. Okay. So think about it. You got the pattern, you got the stop punt zone, stop on high drop, pattern. Let's see what the moving averages are telling us. Actually, let me bring my pivots. Let me see if the pivots reach. I don't think they're going to reach. Yeah, they should. All the way back down to that day. No, they're not. But my moving averages are. You see how right there would have been your entry and you would have gone right into profit. And you stay in that trade. Look what they did. If you had traded off the catch up that it closed below the catch up there, you would have gone right into profit, drops, pulls back up, drops, pulls back up. Before New York opened, there's your drop. New York opens like right in here somewhere. There's your drop. So you probably would have hit your 50. Let me look at this. Again, the goal is 50. You took it off that M here. Bounce off the 50. You see that rejection off the 50. So you would hit your 50 points no matter what, somewhere in here. And then look what happens. They set the low in New York and it reverses. So let me clean this up. I'm only showing you the patterns on the way down on a down cycle. M, AA, the reversal is the W. That's it. All I'm showing you. Maybe tomorrow we'll break down the up cycle, but right now we're looking at down cycles. Okay, look at this. Look at this week. When December, the beginning of December, the whole week of December 3rd to the 7th, Sunday, market opens. What did they do? Did they trap long holders again? Like I keep telling you guys, they're going to trap you at the beginning of the session, at the beginning of the week. So it drops, right? There's your structure. It drops back up. When I show up to my chart here on Monday to analyze, I'm looking at it this way. If I measure from here to here, I'm well over 50 points. So what's my move? Sell. What setup am I looking for? This day, when I show up to my chart, keep in mind this Sunday, Monday, Monday afternoon, Tuesday, Tuesday morning, Tuesday morning, Tuesday afternoon, Wednesday, Wednesday going into Thursday, Thursday going into Friday. M, A, reversal. Somewhere down here, reversal. See how you're going to be highly selective? What's the best trade? There's 2 days right here that are the best days to trade here. Sunday, Monday, Monday afternoon, going into Tuesday morning, London session. The best day to trade was Tuesday, London, like about 12:30, and Wednesday, correct? Tuesday afternoon, Wednesday London, going into Wednesday morning New York. Those 2 days were the best days to trade. If you waited and were patient, this move netted you 160 points. This move, you got your 50. Okay. Obviously, my sessions are not going to go back this far to this week, but if I put the moving averages to know when you're going to get in, the moving averages are used by the banks a lot too. So we use them for our entries and exits. Okay. Look what they did here. This is hold the Mayo. Okay. This setup is called hold the Mayo. They're bouncing off the 200 EMA, which is the Mayo. Look right there. There's an M at the Mayo. Boom, boom, drop. So when you see that, hold the Mayo, possible M at the Mayo, railroad tracks at the Mayo. I mean, that's technically what we call it, but you can call it as a 50 reject. It rejected off the 200 and drops. It's kind of like the 50 reject, but look what happened. You got the pattern there. If you waited for it to close below the catch up here, and you go right into profit. You see why you don't get out of this trade until you get you're gonna hit your 50, but see why that's why I want you to milk every point out of it to maximize your time. You don't get out of this trade until you get some type of behavior above the catch up. You need a candle to close above the catch up. What did it do? It kept dropping. If you stayed in this trade, your exit should have been here. Right there's that first green candle closes above. And look what happens. That's what happens. Look, if you don't get out of it, the next day went back up against you. You should have gotten out right here. How many points do you think that was for? If your entry was here, it went down to almost 150, 160, but because we were greedy and we thought this thing was going to keep going, that's the reason you need to be aware of the ADR. Look how many points it drops, 160. Look how many points this pair moves, 164. So when you got close to 150, you should be looking to get out because it's probably going to reverse because it's met as ADR. That's how we use the average daily range. I mean, if you were up right here 116, 130, you need to be like, you know what? It's getting close to the average daily range. We need to get out of this trade. Because if you didn't, you went from 140, 150 points to only getting about 90, and let's just say 90 points, which is still good. But what I'm trying to tell you is, common sense, be smart. The pair moves. That's why you got to be aware. How many points did this pair move? Okay, well, I took it off the high. There's your 157 points. You need to get out of that trade. Okay, there's the hold the Mayo, M at the Mayo. Look what happened the next day. The next day, there's another M pattern at the high of the day. Remember, the new day here starts 2 p.m. So where's my high? 2 p.m. to the next day at 2 p.m. I show up to my chart, 11 o'clock at night, wait for London to open. This is where I'm at. I was expecting drop. So I took this little drop, and that drop we already analyzed it. It was good for 50. So Tuesday, Wednesday were the best days to trade on this particular pair. You see why we're going to trade less and make more? You see why we're not going to trade every day? You're going to project and anticipate. You let Sunday, Monday play out so you can see where the hell we at it. Is it a peak formation high? Did they anchor the high already? So let's go back to the previous week. Okay. Let me remove the indicators. And it's the same, you guys, it's the same. Everything that I'm saying is the same shit week in and week out. Just got to be patient to wait for it. Weekly structure. And go back to that previous week. I'm only looking for moves to go down, to sell. Okay, we just did this one. Okay. November 26th, that week, market opens here on Sunday. Market went up. Okay. There's your M structure. They're trading away from it. When I show it to my chart here, I need to measure from here to see where we at. Because right now, basically, I'm not seeing that yeah, I see that trap move. I see the rise. So I see, okay, they're trapping long holders. I'm looking for shorts. And what are they doing? They're trading away from, now they're trading away from that peak high. So what's my move the next day here? When I show up to the chart, Monday night going into Tuesday, there was only one good day. Based on this, you should have taken this M. There, look how the M sets the high of the day there. That was the only good trade. Because look what happened. It went chop back up again and back down again. So they didn't give you your nice 3 levels of drop or 3 days of drop. But this was the only best trade, and that it was good for 63 points. Keep in mind, look what price got rejected. What did I say this dotted gray line means? What does that dotted gray line mean? That's what price opened on Sunday afternoon. That's what price opened. It just paints it all across for the week. That's where price opened. Look what they did. It's all a science. Drop and rejects off the price where the price opened. Rises, comes back down where price opened. You know, like those are little tips. Where did price close? Keep this in mind. 80 to 90% of the time where the market opens at the end of Friday, it is probably going to close where it opened. It opens here. They went up, back down, back up, back down. Thursday, Friday. Where did price close Friday? Price close where price opened. That's a typical week. It opens here. That's what that dotted white line is there for. Price open here on Sunday. Price close there on Friday. Okay. There was only one good trade, which was here. That was good for about 50, 60 points. Now, keep in mind on this particular trade. Now, I'm looking at all the pounds. Maybe pound. This is pound yen. Maybe pound dollar drop. Drop 3 days. I don't know. I'm not looking at that right now. I'm looking at the pound yen. But on this particular week, I only have one clean setup. I have one clean setup, and that's all I have right here. One clean setup based on the weekly structure. So I would have taken the trade here, and then I saw that it went back up, and then I'm like, okay, I'm at this point. I don't know. It went back up. It should have gone back down. So this would have been the only good trade, and I don't know the other pounds. The other pounds might have been a better trade on the other pounds. Like there might have been more opportunities on the other pounds throughout the week. So, but by doing this, you're going to be, if there's 6 currency pairs, you took 6 quality trades times 50 times 100. You're talking about making anywhere from 600 to 1,000 points a week. If you just wait and be highly selective, just wait for the weekly structure. Now, look at this. I want you to pay attention here. Price opens here, consolidation up, drops. If I show up to my chart, when I show up to my chart here on Monday night, going into Tuesday, do I have Can I distinguish where's the peak high, where's the peak low, so I can trade away from it? Exactly. No, this is a guess what? On this particular night, on this particular pair, no trade. So I'll probably move away from that pair. But even though there was a nice big move here, look what happens. I'm gonna break it down. They go sideways. I can't distinguish where's the peak high, peak low. They drop it. They went back up again. They went back down again. Now, put a line right here. Look what they're doing. Now they're going back up again. See, we would have been lucky with this move because I wouldn't have been able to distinguish if this is my peak high or the peak low. So on this particular pair, I wouldn't have felt confident on none of these trades. They're not on this setup because I don't know if the peak is too high. They're too close to each other. So on that particular pair on that week, I wouldn't have taken the trade because again, I'm not going to take something to get lucky. Okay, that's what I'm showing you. I'm showing you moves just to go short. Okay, there's moves there to go long, but I only want short positions. Right here, there's long positions there. Look how it's been rising and rising from this previous week. Rise, rise, rise. So obviously they're going to get the correction. You know, 3 days, 3 levels over a week. Now you get the correction over here. But let's go. Since we have this, break it down again. Price opens, chops around. When I show it to my chart right here, what is the first thing that you're thinking? That the market is trading from where? From the low, peak low, because it's trading away from it. What's my move here? And it corrects with the M. That's it. This was a clean setup. I guarantee you they hit the stops low here. Hit the stops low, rise. This was the only good setup right there, basically what I'm looking at. Unless you would have waited for here to go short after 3 levels. But this was the only position to go long right there. You were expecting long because you show up to the chart here and you see that the market has been rising off the peak formation low. Okay, so you should be projecting stop hunt low, rise, and they gave it to you. That's why if you're patient for these moves and you take this, that was good for 60 that was good at least for 100 points and or until it trades back down below the catch up. But you're right, Peter, go long. That's it. That was, and honestly, this was the clean setup there. I here it was more advanced right here the next day. I guarantee you it's probably like a 50 bounce right there. Do you guys think there's a 50 bounce right here or not? That's an advanced move because look how this setup sets the low for the day. Right here, the low is set right here, but it's probably not, and the stop one is probably down here. So what happens here is probably a 50 bounce. Let's see if I'm right, because those are the only 2 moves that they can give you there. Let's look at them. That was November 7th. Okay, no, close enough. I mean, they're in that zone though of that 50. There's the hold the Mayo, stop hundo rise. They're in the vicinity of the 50. I would have loved to see an actual rejection of it, but it was a rise. Okay. Let's take these last few minutes here. It's 9:30. Let's go over some questions that you guys might have. Most of you guys have been with me for a while already, so this stuff should make sense. And I don't think there's and some of you guys are taking a retest again. questions. And this method applies to every pair. Again, I just broke down the pound yen. If I bring in another pound dollar, drop it in there. Again, there's going to be days we got a better. You see how right here you got a better setup. There's your M. There's your anchor. You trade away for it for the next 2 to 3 days. And what happened? Major. There's your stop hunt, high drop. That's what I was trying to tell you. Maybe on that pair is not as clean as on the other pairs. So when I bring in the other, this is pound US dollar. Look at that. Nice setup. Stop hunt high, drop. Questions while I'm reviewing this. Are you guys clear now why we don't trade Sunday, Monday? And it's all based on a weekly structure. You have to wait for the anchor point to be set Sunday, Monday, and then so we can form our bias. There's going to be pairs where it might be Tuesday or it might be Wednesday when the peak is set. Let's see. When level 3 EMAs found out, how can you anticipate a reversal? Well, reversal. Before I take a trade, have they held that high for how long have they held the high? The EMAs might be fanned out. What's the ADR from the previous peak low to the peak high? I'm going to show you a move where that's what I would. Let me see if I can find one right here. I would expect the reversal. Again, I got to confirm the levels. I got to confirm how many points has it moved. Where's the previous peak? If I'm at level 3 rise, where's the previous peak low? Like, check this out. Let me just this pair, this pound US dollar moves 113 per day. Right now, the pound US dollar averages 340 times 3 times ADR. So when anything close to 340, expect a reversal. So let's see. A reverse down here, right? What do I have here? Hold on. 340, close enough. Clarence, you see this? Peak high, measure to the peak low. How many points do I have there? The pattern, the ADR. I have 383 points. What did it do after the ADR, after 3 times the ADR was exhausted? I have 383 points from here to here. Again, the ADR is just an average. It's not going to, sometimes it's going to be exactly to the pip. I got 380 points. This thing moves 3 times ADR is 340. So I'm close enough. That's fine. What did it do? Reversed. Now, if this pair moves 340, let me break it down for you. Well, that's why it should continue to rise. Look where we actually, maybe it should rise one more level. So maybe tomorrow night we'll be looking to sell this. Why? Wait. I'm gonna wait. I'm already anticipating from here to where is that? I'm at 320. Guess what? Tonight, if I'm at 320 and I just said that this 340 times ADR, if this is at what do we say at 320 right now from the low, from here to right here, right now, it's at 320. What do I project and anticipate this to do? If they do this, Sunday night tomorrow. Right now it's Sunday right here, Sunday night. And then it'll be Monday morning, New York. I expect another 20, 30 points. They can go up there. They can even take out this previous week, but I expect them to go like this. If they do this, and when I show up to my chart, you should already start projecting and anticipating. This will be Monday afternoon, going into Tuesday, London. What am I expecting? They have to do this first, though. What am I expecting? What's my move? None? We forgot already? Any other questions? Let's go over any other pairs we want to look at. Got to project and anticipate. I'm gonna let this play out. Let them recycle this. Let the cycle start fresh again. Let them fake out long holders. Trap them long. I'm going to be looking for shorts if they do this Sunday, tomorrow night, going into Tuesday morning. Exactly. A1s, we're looking for A1s. That's it. Project and anticipate. Project and anticipate. And that applies to any pair you're looking at. You have to know what's the average, what is that pair average every three times ADR before you start looking for reversals. You got to let Sunday, Monday play out, because again, the market is based on a weekly structure, 3 to 5 days, a weekly structure. Weekly structure. You're gonna have a high of the day. Excuse me. You're gonna have a high of the week, low of the week. You need to let that set in. Obviously, if it was rising for a whole week last week, then you'll be looking for sells the next coming week. It's got to correct. Okay. I mean, it doesn't matter. Random. Let's pick up Euro Australia. Euro Australia. Look at this pair. I mean, they did what they were supposed to do. Look, price opens, drops. Look how they're trapping short holders. And overall, look what they did. Look at that. It was some news release. So look, when I show up to my chart here, it rises. It rises. When I show it to my chart here on Sunday, Monday night going into Tuesday, what am I looking for here? I show up here. This has not taken place yet. I show up here. What am I looking for? Exactly. Go long. Because when I show up here, is the market's coming from the low to the high. So what am I doing? Peak formation low. Do not trade back towards the peak. Do not counter here. And look what happened though. New York opens. Bam. Exactly, Peter. Trade at this level. I'm looking for clues to go this way. Need to trade away from that peak. And look what happened. Where's my high of the week? The how here. Peak formation high, how of the week. What did it do? Dropped. What's my move the next day here? It's missing a day because of the holiday. Looking to go short. Anywhere go here or here. It's probably a 50 bounce, right? A 50 rejection right in here, and it drops. Okay, I like this one. This is perfect right here. Look at this one. Price opens sideways, goes up. When I show up to my chart, when I show up to the chart here on Monday, Tuesday, can I distinguish where's the anchor point at? No, I'm too close. I show up here, I'm close to the high, and I'm still within range to the low. So I don't take a trade here. It's a no trade this day on this particular trade. Yes, it dropped. Let the retail traders make this money. That's fine. Then look what happened. W pattern, rise, rise. The W was set, multi-session W. New York, Asia, London. Here's when you trade the W. There's the pattern. If I bring in my moving averages, it's probably a 50. It's probably a 50 bounce somewhere in there. Let me bring them in here. See, like science. Look at the mustard. The mustard is going to help you distinguish the pattern. There's the W. I'm not falling. They faked you out with a stop hunt high drop, and there's your 50 bounce. That's a bounce. Science. I mean, that's all they got right there. Those are the only two moves you're looking for. Either a clean stop hunt low rise or a 50 bounce. Let's bring in my sessions so I can get confirmation. See how that would have faked out if you're just looking for a stop hunt high drop. This would have faked you out. Stop hunt high drop. You're thinking, and boom, do not counter back towards the peak. That's your low of the week there. Who can see this? Stop hunt high, drop, but because we know it's an up cycle because we're trading away from this, rise. 50 bounce. And that trade was good if you didn't get out because the rules right there's your 50. The 50 happened in New York. That was good for 100. You should have stayed in that trade all the way through. I mean, before this, obviously, I mean, because nothing, you still would have bagged over 100 pips here. Because if you waited for it to close below the catch up, 100 about 100 points. That's it. That was the only good trade that day. There's going to be weeks like that. Okay. The previous week, look what it did. See, that's what when you put the indicators, obviously it makes it clear for you. But when I take it away, because I want you to start reading the market this way. Okay. This is the last one that I'll break down. I want you to start reading the market this way. That when you analyze, let Sunday develop. Okay, Sunday opens. What are they doing? They're rising. Okay. Drop and it rises. Drops and it rises. See, I'm still close. I wouldn't take a trade here. Look, you're too close to the peak high and peak low. You can't distinguish which one's the high, where's my anchor? Anchor's there and the anchor's down. Surely is down there. I'm too close to both. It's a no trade on that day. Okay. So look what they did. When you show up to the chart here, can you distinguish that that the market has been rising, that the trend is up, right? Okay, the market has been rising. I'm here now. I can see that's my clue. Okay, the market's been rising. I'm looking for V's and W's to go long because I'm looking at it like if the market's rising, that's what it's doing. It's rising. So obviously the peak was set early enough. The peak was set here. That's your low of the week. That's how I'm looking at it. The low of the week. I couldn't distinguish it here because I was too close to here and I was too close to it. So I let it play out. Now when I show up here, I see that it's coming from that has been rising, that is coming from Sunday's low. So I'm looking for clues to go long. And you already know that they're working the 50 or the 200 bounce Mayo back up. Look at a previous week. That's why this indicator is going to help you out. You analyze on this weekly structure to form your bias, and then you plug in the other template with the stop hunts, the pivots, and that's it. Okay. When I show it to my chart here, look how they did. Fake long holders, they drop it. They drop it. drop it. They're dropping. When I show it to my chart here on Monday night, what do you can you see how you can read like, wait, it's been, the trend has been coming from the upside to the downside. So, okay, I'm trading away from that peak, stop on high, drop. And if you see this was the only good trade, because next day you were looking to go drop one more and they didn't. This was the only good trade. That was the only clean setup on this particular pair. That's December 11th. Let me see if I can, December 11th. Will it go back that far? Hold on. No, it's not going to let me go back that far. Or maybe, there it is. There it is. Market went up, false move, session beginning, London, drops, rises, and drops, and drops. Any other questions? It's the ones that are doing the retest, that are taking the retest, this stuff should be clearing up a lot more than it was before. Who doesn't have this weekly lines? I'm going to send it to you because you need it. On this particular template, you need to analyze on the weekly structure to form your bias, and then plug in the other template that has the sessions, the pivots. That's just going to help you for confirmations. That's all. Don't rely on them so much. That's just to give you, it's like the training wheels of a bike. Until you build some confidence, then you're not going to need those indicators. Basically, just go off the weekly structure and the moving averages. Okay, let's see. I'll send you that. Okay, Clarence, I thought you had it already. I'll send it to you. Teresa, I'll send it to you. Peter, Anai, I'll send it to you. Yeah, you need this. This is going to help you big time determining the bias to form your give you an idea of what they're doing, and then you plug in the other templates to make your entries. That's it. So those are the setups so just to do a quick little recap, we looking for one on the way down, and the market corrects with the W on the way down, M, A1, A2, W on the way down. Casey, okay, I'll send it to you too. What I'll do is I'm gonna send it to you. You're gonna download it to your desktop. Make sure you know where they're at. Once you download them, copy them, because I need you to paste. You're gonna do a copy and paste. So you're gonna do, everybody that's watching, you're gonna do this. Once you know where they're at, copy them. Then you come to your platform. You're gonna go to File, Open Data Folder, MQL4. You're going to go to Indicators. Anywhere here where it's blank, where it's white, or on this side, right click and paste. Paste it. When you paste it, you're going to see that it installed. Close this out. Come over here to your indicators. Right click, refresh, and you should have them like this. Weekly lines. All you're going to do is, since you're already going to have them there, you need to, most of you guys already set up your charts with the plain chart. Some of you, your plain chart should look like this. Zoom out. And all you're going to do is drag the weekly, drop it in here, hit OK. That gives you your weekly lines. This is where price opens. If I zoom out, that gives you where the price opens. And that gives you Sunday. That gives you the whole week stands out now. You got your week Sunday where it opens to the next week Sunday. 1 week, the whole week, and you zoom out and you can see it. There it is, Sunday to Sunday. And you were asking what is the remember hover the mouse. Also, once you install it, you need to save this. And I also want you to install you already have this indicator. Also drag it in there and drop it in there too. Is this, you should have it, click it, drop it in here the same way, and you'll have this indicator because you already have it. And then drop the weekly ranges, which is this, the 3 times ADR, click it and drop it in here as well. That'll appear. And then I need you to save this template by right clicking, template, and save template, and just name it weekly structure, plain weekly structure. Save it, and that's it. It'll be saved, and you will have that template on there. Now you can go from template, you can go from the weekly structure template to the template that has all the indicators. Boom. That, because once you form your buys, you know what you're looking for. Or you can you can manually, you can always manually drop the moving averages. I have a template that has the moving averages already on there for your entries. Click it and just drop it in there. Boom. I mean, there you should have those indicators already, but I'll send you that. So that's how you'll install it. Once I send it to you, download it and download the templates like a file. You can't open it because you only the program here. You only can install them on here, and that's it. But the ones that were asking me what these lines means, weekly structure, plain weekly structure, boom. Okay. Remember, every week has a high of the week and low of the week. This dotted gray one right here is where price opened. Look how it opened right here already. It opened already. That's why throughout the week, you'll be able to determine where the price opened. It opened here, and it's just indicating where price opened. This green one, hover the mouse over it, and it tells you. Previous week high. This is the high right here. If I look at this week. This is the high for this week, right? That's the high for that week. That green indicator is telling you that for this current week, that's where the high is at right there. The red down here is telling you the low of the week, of the previous week. That's right here. It just comes over here so you can see where they're at. That's it. Hover the mouse over it, and it should be in the description right there. Previous week low. Current week open. Previous week high. That's it. Who doesn't have these indicators already? There's about 4 or 5 people. I need to send it to you. Teresa, Anai, Casey, Peter, Clarence. I'll send it to you right out through the Telegram. Again, download it, and you already know how to upload it to the platform. But this will help you out. Eddie, who's Eddie?
Alfonso.
Oh, okay. Yeah, my bad. Yeah, I'll send it to you. This has been recorded. I'll convert it right now. It'll take me about 30 to 40 minutes to convert it, and I'll post it up in the group so you guys can have a replay of this training. And I'll send you this indicator right now